Curious about supercharging your investment portfolio with the power of electric vehicles? The electronic vehicle industry is rapidly evolving, and there are many companies such as Tesla, BYD, and Ford who are competing for a piece of the market, and you could be part of it too. In this video, I will show you the 5 top EV industry stocks to buy and hold forever. I will show you the future projections of each of these stocks and how much it can turn a one-time $10,000 in 10, 20, and 30 years from now. In the end, I will show you a growth stock that can turn your $10,000 into more than $10 million. But first, why I think EV stocks should be your next long-hold strategy. EVs aren't just the future, they're the now. The shift towards greener, more sustainable transportation is accelerating, and investing in EVs is one of the smartest ways to tap into this booming market. Why, you ask? First, investing in EV stocks offers diversification, spreading your investment across a range of products of the EV company involved in the EV ecosystem. This includes car manufacturing, battery producers, and even raw material supply. Second, the EV market is projected to grow exponentially, driven by technological advancements, supportive government policies, and increasing consumer demand for eco-friendly alternatives. By investing in EVs, you're not just betting on a single company, but on an entire industry's growth. So if you're looking to align your investments with the future of transportation, EVs are a compelling choice. I've projected the future values of the EV stocks in my list to give you a clear picture of what your investment could look like over time. The methodology here is all about a detailed 5-year analysis of each company's financial health. I've looked at dividend yields, market recent bias, and average annual share price appreciation. Think about it like this. You're starting with a $10,000 investment in each ETF. This consistent amount helps us see how different factors like tech advancements, government support, and market demand will shape the growth of your money over 10, 20, and even 30 years. Now let's get on with my list. First up is BHP Group Limited. You might not immediately think of BHP Group when considering EV stocks, but as a major nickel miner, BHP plays a crucial role in the EV market. Nickel is an essential component in EV battery chemistries, and the supply is struggling to keep up with demand. This supply-demand imbalance is beneficial for nickel mining companies like BHP. Tesla, for example, signed a deal with BHP last year to obtain sustainably sourced nickel from Australia, highlighting BHP's importance in the EV supply chain. BHP stock is held in 18 US-traded ETFs, totaling around 1.6 million shares. The largest ETF holder is the First Trust Index Global Natural Resources Income ETF. Interestingly, the Simplify Volt Robocard Disruption and Tech ETF have the highest allocation to BHP, highlighting its significant presence in the US ETF market. There's more to BHP than just its growth potential. The company's dividend growth is quite attractive. BHP has a 5-year average growth rate of 7.63%. Its dividend yield stands at a solid 5.55%. Significantly higher than the sector median of 1.99%. The sector's relative grade and past performance indicate BHP's resilience and potential for income generation, even through sector fluctuations. Let's dive into some metrics to see why the stock is a compelling investment. If you invest $10,000 in the stock and reinvest dividends, after 1 year, your investment would be worth $10,651. In 10 years, your investment would be valued at $22,611. Over 20 years, your portfolio would skyrocket to $94,126, with annual dividends of $14,858. After 30 years, your investment would grow to an impressive $1,139,757, providing $300,205 in annual dividends. That is $25,017 in monthly income. Next up at number 4, I have BYD Company Limited. While Tesla often grabs headlines in the US, China's BYD is a powerhouse in its own right, especially in terms of production. In 2023, BYD and its subsidiaries manufactured roughly 3 million EV and hybrid vehicles, outpacing Tesla for the second consecutive year. BYD's range includes both plug-in hybrids and battery-only models, offering a diverse product lineup that capitalizes on economies of scale. The company's homegrown appeal in China, combined with its close relationships with policymakers in Beijing, provides a significant advantage over competitors from the US and Europe. BYD's dividend growth metrics also show a promising picture. Although its 4-year average dividend yield is lower than the sector median, BYD has been catching up. Currently, its dividend yield stands at 1.13%, with a 1-year dividend growth rate of 6.56%. Over the past 5 years, BYD's dividend growth rate has been a remarkable 22.42%, much higher than the sector median. Starting with a principal of $10,000, BYD boasts an average annual return on share price of 8.55% and an impressive dividend growth rate of 22.42%. If you reinvest these dividends, after 1 year, your investment will grow to $10,968. In 10 years, your investment would be valued at $27,682. Over 20 years, your portfolio would be valued at $127,177, with annual dividends of $13,907. After 30 years, your investment might reach an astounding $3,029,527, paying $940,357 in annual dividends or monthly dividend of $78,363. The third stock is NVIDIA Corporation. Known for its innovation in graphics processing and AI technology, NVIDIA is making waves with its cutting-edge AI platform for automotive applications, which is why it is on this list. This could potentially pave the way for advancements in self-driving technology, making NVIDIA a must-pick for those interested in the future of EVs. When it comes to dividends, NVIDIA isn't exactly a standout. The company's dividend yield is currently a mere 0.02%, which is significantly below the sector median of 1.37%. Its dividend yield grade is an F, indicating it's not the most attractive choice for income-seeking investors right now. But don't let that deter you from considering NVIDIA for growth. The company has shown impressive dividend growth rates. The 1-year dividend growth rate stands at 33.17%, a remarkable increase compared to the sector median of 6.79%. Here's a look at how an investment in NVIDIA could grow over time. Starting with a principal of $10,000 and assuming no additional annual contributions, after 1 year, your $10,000 would grow to about $11,937. After 10 years, the investment would be worth approximately $58,713. After 20 years, your initial investment would balloon to roughly $344,491. After 30 years, the value of your investment would cross $2 million. The total value added would be $2,008,238 to your initial investment. While NVIDIA's current dividend yield might not be enticing for income-focused investors, its strong growth potential makes it a compelling choice for those looking to capitalize on future technological advancements. Next one is also not an EV manufacturer, but has a lot to do with an EV, ON Semiconductor Corporation. If you don't want to invest directly in EV stocks, there are other options to consider for exposure to the EV market. ON Semiconductor Corp is one such alternative, expanding even ancillary driver assistance functions such as cameras and sensors. ON Semiconductor is one of the few stocks that emerged relatively unscathed from a tough 2022, while its stock price falling only 9%, while the Nasdaq shed 33% of its value over the same period. ON Semiconductor's intelligent power technologies play a pivotal role in the electrification of the automotive industry. These technologies enable the creation of lighter and longer-range electric vehicles, fast-charging systems, and sustainable energy solutions for solar strings, industrial power, and storage systems. Although ON does not currently pay a dividend, its impressive earnings per share growth is noteworthy. In 2020, the company's EPS was 51 cents, and by 2023, it had increased to $4.24, with projections showing further growth to $5.82 by 2026. Now, let's delve into the investment potential of ON Semiconductor. ON boasts an average annual return on share price of 22.96% with no dividend payout. After 1 year, your investment would grow to $12,296 thanks to the significant appreciation in stock price. Fast forward to 10 years and your investment would be valued at $79,002. Over 20 years, your investment will cross $500,000 and reach $624,133. After 30 years, your initial $10,000 investment would be valued at $4,930,780. Although ON does not offer dividends, its capital appreciation potential is substantial. Now, topping my list at number 1 is the inevitable Tesla. When you think of EV stocks, it's almost impossible not to mention Tesla, the undisputed leader in the global auto market. Tesla has revolutionized the EV industry like no other, thanks to its strong and dynamic corporate image. Investors often view Tesla not merely as an automaker, but as a cutting-edge tech company. This perception is well-founded, given Tesla's leadership in battery technology and self-driving capabilities. However, with new competitors entering the market, Tesla's dominance is being challenged. Yet, one of Tesla's key advantages is its profitability, something rare in the EV sector. Tesla's growth rate is an interesting metric to consider. With a year-over-year revenue growth rate of C+ and a forward revenue growth rate of A-, it's clear that Tesla's underlying metrics contribute significantly to its share price appreciation. Tesla is unique among many of its competitors because it doesn't pay dividends. Instead, it focuses on reinvesting its profits to fuel further growth. This strategy has been highly effective, as evidenced by the impressive average annual return of 27.21% in share price. Investors benefit from this approach through stock splits, which have helped make Tesla's shares more accessible and increased liquidity, ultimately contributing to wealth growth. Now, let's delve into some numbers. Your $10,000 contribution to Tesla after 1 year would grow to approximately $12,721. After 10 years, it will reach an impressive $110,972. If you hold your investment for 20 years, the value will be $1,231,473. And after 30 years, it could potentially reach a staggering $13,665,879. This significant growth comes solely from capital appreciation, as Tesla does not pay dividends, which means reinvested dividends do not contribute to the total investment portfolio value. So why is Tesla such a compelling investment for the long term? The company's continuous innovation in EV technology, battery tech, and self-driving capabilities positions it at the forefront of the market. Tesla's ability to maintain profitability while leading in tech advancements make it a unique player in the sector. Tesla's strong growth metrics and strategic reinvestment of profits ensure it remains a robust option for investors seeking substantial returns over time. Want to know how to turn a one-time $25,000 investment into over $10 million that pays $10,000 every month? Click the video on the screen to find out.